Hello and welcome to Quant Advisory's investment markets update for Q3 2024. Here we'll cover the key issues concerning markets at the moment, and then we'll move on to an investment outlook as well. So we'll start off by considering some of the key issues concerning markets at the moment. Starting off with inflation. So inflation fell across the developed world over the quarter. Inflation fell in the UK, the US and the Eurozone. In the UK, inflation fell to 1.7% in September, which was below expectations. And this was the first time in over 3 years that inflation has fallen below the Bank of England's target of 2%. So this fall in inflation has allowed central banks to start loosening monetary policy. The Bank of England cut rates by 25 basis points in August. And one more rate cut is expected this year, which will likely come in November. And the bank will likely continue to gradually reduce rates over 2025. Core inflation and wage growth remain slightly elevated in the UK, but they are falling as well. In the US, the Fed took a more aggressive approach, cutting rates by 50 basis points over September. The core inflation rate remains a little lower in the US, and they also had some fears of a recession recently, which coupled together may have warranted the more aggressive approach. And finally, the European Central Bank cut rates by 25 basis points over September and also October, and are expected to gradually continue reducing rates over 2025 as the focus shifts from bringing down inflation to supporting economic growth. And in terms of economic growth generally as well, a soft landing seems likely. The most likely outcome in most regions as inflation comes under control. But it does seem that we have seen a slowdown in economic activity in certain areas over the quarter. This is particularly in North America, but also some other areas such as Germany as well. Another thing worth mentioning that happened over the quarter was the Chinese stimulus package. So Chinese policymakers have introduced a significant stimulus package recently. This comes in the form of reducing interest rates, reducing the required reserve ratio for banks, and also more property market support as well. So the aim of the package is to pull the Chinese economy out of deflation and boost its economic growth to their target of 5% per annum. So China didn't experience the surge in prices post-pandemic like we've seen in the developed world due to the increase in demand. And also their recovery has been a little bit more lackluster as well, with weak domestic demand and some struggles in the property market. So the stimulus package has caused a surge in the Chinese stock market, but many economists are wondering whether it is enough to boost real economic activity without some more substantial fiscal support to go with it. And finally on this side, there are some uncertainties that remain in markets. So the US election is on the horizon. Donald Trump is now the odds-on favourite to have another term there. The main concern for markets there is the potential impact of his plans for tariffs on inflation. Elsewhere as well, some other risks remain, ongoing conflicts, not least the events unfolding in the Middle East. And finally, a bit closer home as well, with the UK budget coming up later this month. There are fears there that surrounding the effects of the potential tax hikes. So plenty of things to think about and look out for over the coming months. So let's take a quick look at asset class returns over the quarter. So we saw modest returns for equities. The main story here is that emerging markets produced a return of 4.8%, outperforming developed markets over the quarter. And these returns are all in local terms. So Chinese stocks surged before the quarter end following the US Fed's interest rate cut. And also the stimulus package from the People's Bank of China had an impact there as well. Emerging markets tend to benefit when US interest rates fall, as economic sentiment is improving and risk appetite is high during those periods as well. So emerging markets have performed well over the quarter, but also they've performed well over longer periods as well. So it'll be interesting to see how this pans out going forwards. Meanwhile, we saw strong returns for UK fixed income over the quarter as well, as yields fell across the curve. Both nominal and inflation-linked bonds performed well, and also corporate spreads widened slightly over the quarter, but they still remain quite low relative to historic standards. And finally, on this slide at the bottom right there, volatility spiked slightly in August, as we can see. And this was due to the short period of time when the market feared a recession in the US when the SARM rule was breached. Volatility has been a little bit elevated since then, but nothing material. On to the economic outlook. The message here is a soft landing is in sight now, but uncertainty still looms. Inflation continues to fall across the developed world. Services and inflation and wage growth have been a bit more of an issue in the UK, but it now looks like the monetary policy measures have done their job in the most part. Central banks have started easing policy and are expected to continue doing so into 2025, and this provides a welcome headwind to economic activity going forwards. As I mentioned, the soft landing is in sight now as economic fundamentals generally remain quite strong, but we have seen a slowdown in economic activity in recent months. And with this, we have seen an increase in recession fears. Several leading economic indicators imply a recession is now on the horizon in the US, but for the most part, most indicators still imply a low likelihood of an imminent recession there. But we have seen a slowdown in certain areas, mostly in North America, but also in some areas in Europe as well. Ongoing conflicts remain a key issue for markets as well. The conflict in the Middle East could reignite supply chain issues if it worsens there. And finally as well, elections have added an extra layer of uncertainty for markets this year. It will be interesting to see how markets react to the US election and also the UK budget a bit closer at home as well, if the status quo is disrupted in any of those events, particularly in relation to tax hikes or tariffs.
Thank you for listening to Quantum Advisory's quarterly investment market update. We hope this edition has been informative and provided you with a useful update on the current economic climate. If you would like to discuss any of the topics raised in more detail, then please get in touch with your Quantum contact. Once again, thank you and goodbye for now.